Thank you.
Thank you. Thank you, everyone. The topic that I'm discussing is passive income leveraging NAAS or DAAS, which is nodes as a service and DeFi as a service. Roy Solorzano. A little bit of background. My background is in IT and IT finance. I started in the consulting world, so I did make those pretty slide decks, and the company I worked for got paid a ton of money for it. So I did some management consulting and IT specific for a good portion of my background, and then IT finance for the rest for a global bank. Closer, sure. So how did I get involved in sort of the digital asset space? I think it was around 2017. My brother, who's here, gave me a call and he said, "Hey, brother, why don't we invest in Bitcoin?" And if you have ever worked in a large bank, you usually are very busy, and I was busy trying to accomplish things. And I said, "Sure, I'll look into it." Reality is, I was just way too busy, and in my mind, I said, "I'm just too busy. I'm not going to do it." Right? I didn't actually go back to my brother. It was that, right? And so, if you look back at what Bitcoin did in the last 4 or 5 years, yeah, of course I should have looked into it. So when my brother reached out again about 1.5 years ago, and he said, "Hey, I got a buddy of mine who's investing in Ripple and XRP. Want to take a look at that real quick?" I thought, yeah, maybe this time I should actually look into it, right? So I did look into it, did my own research, and I thought it had some legs, right? I got some background in IT, enough background in the banking world, just being around it for so long, and I understood the value proposition or the target market that Ripple was trying to fix, which is cross-border payments. And I knew it was extremely expensive to do that, and I said, yeah, the business value makes sense. So obviously, I looked up where I could potentially pick up some private equity. That's how I found Link2, and then I obviously picked up some of the tokens as well. So that's how I got to get involved in Link2 as an investor, and then eventually into the digital asset space or the crypto space, and then looking into something like passive income, specifically for the topics that I'm discussing. So again, the domain is passive income, and essentially what passive income is you're just getting some type of income routinely for not actively being part of that organization or that entity, right? Full disclosure, the risks are very high in that space. It's really new, probably 1.5 years old-ish, and I'm going to be discussing some of my experiences in it, discussing a couple of projects that I'm invested in, but by no means am I endorsing them or I'm asking you to invest, and certainly it's just me sharing my experience, right? And certainly, you hear this all the time, please do your own research, right? So what's the opportunity? Those are risks. What are the opportunities? The opportunity is basically you can invest a very little amount, or relatively little amount, into a startup, if you will, right? Usually around the digital asset space, but it doesn't have to be. And essentially, you're investing in something new, and the growth potential is high. Right? On top of that, there's a unique characteristic about this space that they figured out a way to offer some type of liquidity. So you make an investment, then you can actually get some of your return on it, or return on that initial investment relatively quickly, which is interesting, right? Okay, I can invest. There's an opportunity for me to get my money back and continue to invest. So that caught my attention. The domain again was nodes as a service, DeFi as a service. I think someone mentioned DeFi, so it just means, DeFi just means you don't have that middleman like a broker, stockbroker, or advisor advising you, but at the same time, he's not charging you a fee, right? So you're taking that middleman out. So as a service, let me just quickly define it. I think the term came around more in the IT world, but I mean, if you think about it, I think a lot of us already participate in the as a service model, right? Your phone, your mobile phone, right, is as a service. You're paying a fee monthly, and the companies are giving you the phone service. So that's essentially, it's an example as a service. So it was the cable companies and the famous AWS, right? You have infrastructure, you pay a monthly fee, and you get that service. So that's what as a service means. Nodes as a service, or DeFi as a service is usually tied to some of the digital asset space. Right? Make sense? Okay. I won't go, I have these elaborate details on what nodes as a service is, but I'll let those go. It's essentially investing in the infrastructure of the blockchain model. Right? The first project that I'm going to discuss is the first real NAAS project, or Nodes as a Service project. It's Strongblock, and essentially they're the first, right? So essentially, in Q4 2020, they came up with a flash or white paper, right, just describing what they were offering. Essentially, it was crowdsourcing some money. And the idea was to invest in further decentralizing the network, specifically around Ethereum. And the idea was, hey, we're going to crowdsource some money. We're going to invest in the Ethereum ecosystem, and then we're going to, take some of the profits and share it with our community. Pretty basic. For our investors, the level of effort is minimal, really small amount of effort, but the rewards could be interesting. They created some digital token called Strong to represent their platform, and they came up with this idea of, okay, it's just a logical model. If you take 10 tokens and you unite them together, it creates a logical construct to invest in us, and then we'll offer you, in return, we'll offer you a fraction of our token back, and it accumulates, right? So you invest in us, and we give something in return at necessarily real time, right? Okay, makes sense, interesting. The token is a fluctuating value, so it's a little bit hard to determine, okay, what is it today? What is it tomorrow? And so when you're looking at these opportunities, usually the first question is when can I get my money back, right? You're investing in something. How fast can I get my money out? And then, can I continue to invest, right? Usually some of the questions, right? And so in my slides, I sort of laid out the math. It says, okay, if you invest here, this is how long it takes, yada, yada, yada. But we won't go into those details. I'll share the slides. I also, in my slides, I have the price graph. Since the Strongblock project's been around for 14, 15 months, you get to see how the price per token fluctuated over time. And there's some interesting indicators, but again, you guys can look at it on your own. You can infer some of the things, where the opportunities were and where they weren't. Obviously, when you're dealing with it in real time, it's a little bit more difficult to sort of figure out where do I make a profit or not. But the idea is, just to recap, you make an investment and they produce a fraction of their token in return, and it accumulates daily or real time, and it has a certain value. So you, as the investor, get to choose, do I sell it every day? Or do I let it grow and further compound it? So that is the opportunity for you, that's the decision for you. And depending if you think it's going to grow over time, you might choose to compound, or you might choose to take your money out, right? So they're just depending. There's pros and cons to each. In the slide deck, what I thought I would do is because we could look at it, historically, I laid out, 3 options, and I think they're probably, or 3, what I say, the art of the possible, right? Number 1 is okay, I made an investment here, great. What if I just sold every day, or every month, sorry, at the end of every month? What would happen, right? And so I did some numbers, and essentially, if you bought something in January of 2021, and you invested about 3.3K, at the end of the year, or the end of the year, it went up 33x, right, roughly. That's substantial, right? So you made roughly a $3,000 investment, and if you just, at the end of the month, these are approximate numbers, of course, you pulled out over 100K. And I know in the digital asset space, there were some folks that made an investment a lot more than 3K. Some were 30K, some were 100K. And you do the math, they did really well. Really well. Okay, great. You can figure out that some people would do that. Okay, what's my next question? What if this is a more conservative approach, right? What if you invested, again, 3K, and you focused on getting that 3K back? And then you sold. Given the token price, it was still close to 30K, right? I mean 30x. So the first one was 33x, this one was 30x. Still did very well, right? And the last one was, the question I had, or what I wanted to share was, what if you chose to compound? If you know compounding, you already know what the answer is, right? Or what happened. In this example, I'll share the slides. In this example, the investors decided to compound, for 4 months. And yeah, the math was, close to 250K off that 3K investment. It's very interesting. The last question that I posed here, or just did the math, was well, okay, what if you took the same sort of approach and you made an investment in January 2022? Well, this one was fundamentally different. If you looked at the graph, you would know. This one, you were roughly down. And again, you're not looking at the entire year of 2022, right? Because here we are. It was similar investment. And where would it stand today, right? And this one, the return wasn't nearly as good. It was less than half your initial investment. But if you look at the graph, you'll see that the token price, right? The token price went down dramatically this year. And so I thought about, okay, well, what fundamentally happened? Besides some of the stuff I think everybody knows here, which means the macro environment, right? Macro econ, the geopolitical, that affected everything. Okay, what else? The project decided to pivot on their business model, which led to some overall project sentiment. And in these opportunities, think about it again, right? You make an investment, it starts to generate a token percent for you daily, and as an investor, you have two options. You reinvest the gains, or you sell it. And so if you sell, it's just simply supply and demand, right? If you choose to sell, you're contributing to the selling factor, and it slightly goes down, right? Unless there's some other groups on the other end and start buying more. So if you sell more than you buy, then obviously the token price goes down. And so if you think about it, if folks are losing a bit of faith, or for whatever reason, they'll probably sell more, right? And it doesn't have to be necessarily their own project, but in this case it could be, and it could be other things, right? So the project decided to pivot on their business model, and so I think that contributed to basically the decline. The other thing is the emissions. What is the emissions? It's synonymous with, okay, you made an investment, it's giving you a specific return. You can use something as basic as 1/4, right? 0.25. Right? But as more and more people make an investment, that grows. And so when I looked at, people, at the numbers, people making an investment, I noticed the more people were making an investment, they call it a node, right? A lot of people realized that the emissions, when you look at it, it's growing. It's not growing linearly, right? It's growing, look more geometrically, right? What does that mean? It means linear would be, say, 1, 2, 3, 4, 5. Geometric would be something similar to 1 times 2 times 3, etc., etc. So you understand that the growth is just going faster. And so you could almost say that this specific project, because of their success, the amount of money that they had to pay out was growing geometrically. So imagine that, and that's basically emissions, right? So what you're producing. And so when I looked at it, I said, wow, this, it grew fast, it grew a lot. So did the payout. And so fundamentally, as an investor, you look at something and you say, hey, can this project sustain the amount of money or emissions that they're paying out? Fundamentally, right? And that helps you make a decision. And then the last one, contributing factor was certainly the Black Swan Terra Luna event, right? It just makes sense. Essentially, there was something that happened in the crypto digital world that scared everyone, and certainly that caused some decline too. So, long story short, this project seems like very successful. It's still potentially be successful, but they're doing a fundamental project or business model pivot. There's another project I wanted to discuss, which is a bit different, and this is the Phoenix Community Capital, another interesting project in that space. Again, fundamentally, it is passive income, right? This one's fundamentally different because this is relatively new, but their business model is a little different, right? They're saying, okay, same principle, right? You make an investment, we'll provide you a certain fraction back every day. Their business. So the question is, well, how do they generate money, right? That's what I mean by business model. The business model is the unique part that I thought was interesting was they're investing in incubation projects, right? What does that mean? It means that they're creating different business models, if you will, or different businesses around what they say on-chain or off-chain, is in the crypto digital asset space and just traditional businesses. But they're applying sort of this as-a-service investment vehicle to their investors and community. Again, crowdsource, make an investment, and they give you a portion of their token back every single day. And the liquidity part is, which makes it interesting, is you can choose to sell it. And so every day, or every month, or every week, you can sell it and recoup your money back, or make profit, or however you seem fit. Is how often do you want to pull a portion of that money out, right? So passive income. So I thought this project was unique, and certainly, obviously, I made an investment. And so the other thing they're doing is that I thought was unique was they have different rounds of investment, if you will, but they also have this concept of profit sharing, right? So not only are they for a specified portion of time is offering that, okay, we give you a percentage back of our token for you to either recoup your money or sell or compound, but we're going to offer profit sharing as well. That was unique to me, and I said, that's unique, okay. So certainly something to consider. In my slide deck, I have a list of their known incubation projects. We won't cover them. You guys can look at it in the slide deck. But I did look at it under the same lens as the first project, and I said, okay, let's have a look. If I made an investment in, and they're new, so it was this year that it came out, January 2022. Okay, if I made an investment and I sold at the end of every month, put about 14K investment. In January and I sold every month, what would it produce? In this case, it was about 2.5x. Interesting? Right? Next question. If I made an investment and I focused on getting my initial money back, what it would have produced? In this case, it was close to 2x, but a little bit below, so 1.9 or something like that. Still interesting, right? Because you make an investment. In this case, you pull some money out, but you still own the assets, right? It's still producing something every day. And in this case, they could potentially share that profit sharing ongoing, right? Rather interesting. And the last one was if I made an investment in January and I compounded for 3 months, and this one was low, right? So this was you didn't get your money back. When I shared the slides, you'd understand similar scenario where the token price declined. And if you look at it under the microscope, it had similar sort of contributing factors, right? Look, fundamentally, 2022 is just different than 2022 and 21, right? So the macro econ is different, the geopolitical is different, the crypto volatility is different, yada, yada, yada. But the other thing is, okay, well, what about the project sentiment? And what about emissions? Right? And so when I looked at this one under the microscope, they had a bit of a higher payout. So the emissions was high and it was growing, at a faster rate. It seems like they've figured out a way to cap that. They've reduced emissions for the folks that they're offering for that round of profit sharing, which when I looked under the microscope, right, that's essentially really reduced the emissions. And what is emissions again? It just means the payout that they're giving out, right? So okay, different. When I thought about overall project sentiment, I thought, okay, maybe if they focused on so when you think of token decline, right, or the price declining, goes back to what I said before. The people that invest have a choice. Do they compound, continue to invest, or do they sell? There's a variety of reasons why you would sell or compound, but some of the basic ones is that you still believe where the sentiment is high, and so you continue to compound. But if the sentiment is low for whatever reason, then you sell. And so that's a contributing factor. And that's the one, obviously, that's not included on the macro econ, geopolitical, yada, yada. It's one you can somewhat try to manage. So I thought to myself, okay, what could they do better? Well, maybe they can incentivize or communicate or market their, some of the things so that they would incentivize either net new money or compounding, right? So that reduces the pressure on them. So I thought, okay, I could certainly do it. But then I thought about what they were doing, and every time, so I'm an investor, so they allow some communication back and forth. And then, and the response was is that they're really focusing on delivering. What does that mean, delivering, right? I thought about what they're trying to do, this part specifically. I mean, if they're creating incubators, essentially new companies, they're not just managing their own company. They're not just growing their marketing department, their finance department, their legal department. This company's 5 months old, etc. Right? Create a company. They're incubating other projects that have to grow their client base, have to grow their management team, their legal department, yada 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 yada. And this is if you look at some of their incubators, like 5 or 6 different incubators that they've announced, right? And I'm sure they have more. But you can understand that why they're so busy, if you will. You can start if you peel back the onion, you realize, okay, that makes sense. That makes sense. So, 2 more minutes, okay. So, closing thoughts for me. Certainly there's opportunity there, right? But just like anything else, it's really, really new. You saw some of the figures that I noticed. You know, some of them were really opportunistic. And so some of the things that I would say is when you're looking at, if you're ever looking at things like this, think about what are you trying to get out of it, right? Is it a short-term investment? Is it a long-term, or both? When you're looking at things like that, I think investing early matters. You're gonna realize that some of these are just general principles, and that you apply them elsewhere. Get your initial investment back, and there's opportunity to get your initial investment back, right? Don't forget to take profits along the way, right? If you start routinely selling some, you sort of hedge the situation that happened with what's Harold doing, Black Swan event, right? Yeah, another obvious one. This was so obvious, but you know, I think when you're in the investment vehicle, if you will, like you're the investor, emotions get in the way. Buy low, sell high. It sounds so simple, right? It really sounds so simple, but I think when you're investing, if you haven't invested in a long time, you know, your mindset is a bit counterproductive, right? You think it went low, I should be selling, right? No, it's actually the opposite. You should be buying, and vice versa. And the last one is compounding is powerful. Everybody knows that, but in both ways. If you compound on the right time, it can make an enormous difference. But if you compound on the wrong time, it can make an enormous difference on the reverse side.